Hello guys, Trader Ziff here. So today I'm going to talk a bit about how we can avoid being flushed out when you're trading penny stocks, right? So I'm going to use AT as an example as a case study in this review, right? So when I drill down, when I zoom out on this AT chart, what we can see is that throughout this period of time, all the way from like 2018 to 2019, right? For this period of time, from 2018 to 2019, what the market makers are doing is they're slowly collecting the tickets. Maybe not from here, but starting from this region to this region is their collection point, right? So what we can say is that the average price around this time would be about 4 cents, 4.5 cents, right? And then early in late November, they do a spike. People get excited, people buy into this market, and we're gonna have a lot of people stuck around this area, right? We're gonna have quite a number of people stuck here because noob traders like us, we wouldn't buy when it's going sideways. We all want quick money. Very simple, right? We all want quick money. So a decent trader, a good trader would buy around this period of time, right? A decent and good trader will buy around this period of time, right? They're gonna go into the market. Probably they see the spike, they hold. They see the spike and they hold. Right, and the next candle they see a doji, they quit. And noob traders like us, many of us, when it starts going, we'd be thinking, oh, 80, can this thing work, right? There's a penny stock, you're not going to buy in because it's too risky, right? It's always too risky. And then it goes sideways, you'll be thinking, man, we missed the boat when it was 4.5 cents. We did not buy, and now it's almost 80 cents. It goes up by almost 100%, right? Then you're seeing like a decent floor is being built, and suddenly there's a spike up. And what noob traders like us would do is usually we'll buy into the trap. We'll come in on this day, happily get into the position, and okay, this thing is failing me today. Happily come into a position here, and eventually the market goes down and we stop, right? So during this point of time, many of us, noob traders like us, will be thinking of contingency plan, alright? Should we average, should we cut loss and things like that? Many people of us will do that, right? And then what happens next is that the market gives us some false assurance, right? It goes sideways, it goes sideways. Does it go up a bit, go down a bit, go up a bit, and go down? Eventually, at this point, people are going to think it has bottomed out, and people are going to average, and the market makers push it down again, right? So many retailers will cut loss here, and this is the point of maximum opportunity. Of course, since it's a penny stock, it may not have fundamentals, so people may just cut loss and move on with life, right? So when this happens, the market maker, they don't really care. They keep collecting, and eventually we see a little bit of volume here. And what does this information translate to, right? Around at this point, we can see that the market starts moving, right? It's a movement with volume. So if we were to zoom out, we take the higher volumes out, we can see that, you see, from almost no volume from almost no volume to having a little bit of volume. So this is a sign actually. This is a sign to try to get into the market. Right. If you previously do not have position, this is where you should be risking a little bit. And what happens next is the market is going to do what it's going to do. It goes up and then it hit the resistance. So again, most of the traders who buy into AT, most of them, I can say that maybe 80-90% of the people who buy AT would not be buying around May 2020, right? People will not be buying around this time. People won't buy here. It will start moving. Some people will buy here. But if you look at the chart, if you look at the chart again, it totally does not make sense to start buying here, because this was a resistance. You see, this was a resistance, this area, right? This was a resistance, and it doesn't really make sense to buy into resistance. So again, many people will not buy here, right? Because they wanted to wait for a pullback and then long it up for maximum gains, right? And what happened? What happened is that the market breaks out. So breakout trader were buying here, and noob traders again would probably miss the boat, right? They think, okay, we'll let it pass. We'll let it pass and things like that. Then the price goes all the way up to 18 cents, right? And then noob traders will start buying in, and many is going to get stuck here again, right? So at this point we can say that this is S2 and this is S1. Sorry, it's a bit messy, but do bear with me. So S1 represents the first phase where noob traders are stuck, and S2 represents the second place where noob traders are stuck, right? So the market makers have a way to reward people who are loyal to the stock that they are stuck with, things like that. So what happens is that when they try to push the price up to a new high, they immediately push it with significant volume, and they push it quick. So they already had quite a number of tickets since they've been collecting for about 2 years, right? 2.5 years. And when they start pushing the counter, it goes all the way from 4.5 cents to almost 18 cents. Let's say the average is 6 cents. 6 cents to 18 cents, that's a lot of profit there. So definitely, after collecting, they'll be selling some of the shares, right? They'll be selling some of these stocks. And what happened is that they start selling here, and people got stuck, right? So what happens is that there are like two possibilities. The first possibility is that they're going to just move on and goreng a different type of stock, right? But the other possibility is that they will collect again at a lower price, and this time from what we can see is somewhere about 7 cents. So this is a price where they start collecting. Probably there is some news here, that's why there's a spike. See, not much volume, but yeah, still significantly more than the previous ones. So you can see that there is some sign of collection, and eventually what we see is the price goes sideways around here. The price goes sideways around this region, and the volume is building up. So this is where it starts spiking. So we can say that the price spike because KYY is it that they do glove or whatever rumors that we have, but in the chart it is quite obvious that it is going to spike. So again, let's talk about noob traders again, right? So I purposely draw this box before this recording because I know that many traders would try to trade a pullback, and what happens is that they would take the high of this candle and the high of this candle, and this would be their safe entry point. Of course, whatever noob traders like us can see, market makers will be able to see, right? Many people will try to enter around 18 cents and have their cut loss around below 17 cents. What happens is that market maker will come down at your stop loss, push up, come down at your stop loss, and then continue to go up, right? So one way to not have a stop loss either in the market is to, again, following through the process that I shared earlier, is to try to find out where the market makers hold a position, try to understand where they are, and make your trading decisions using that kind of idea. So for instance, right, what we can see right now in this chart is that there is an ascending channel forming, right? So market maker push the price down, eat out the many noob traders stop loss, and right now what you can see is that it is slowly ascending, right? So if you're looking for a long, you can do so, but due to the market conditions right now, please long cautiously. And if you're looking for a long, I think if you enter, let's say for instance about 19 cents tomorrow, your stop loss ideally should be below 15 cents, right? And to be safe, right? Below 15 cents to be safe, and your take profit should be somewhere around 25 to 26 cents. So at the very least, you give your trade a range to move. Like let's say for instance, if it goes down here, then this setup is invalid. And if it comes up here, you take profit. Or if you would like to hold for longer, like maybe you believe that this stock really has a fundamental, then you aim for, like, it's a trade about 290 here, you can aim for 32 cents, right? 32 cents. So this is one of the ways to safely trade the penny stock.